Hello, everyone. Welcome to our live panel discussion on how technology can help financial services. Technology has always played a crucial role in accelerating the growth of any industry, and financial services are seen to embrace this disruption today than ever. The COVID-19 situation has changed our society so much that every financial service business is trying to adjust their business models accordingly. And technology, analytics, automation, artificial intelligence, video banking facilities, you name them, there are so many, is definitely going to play an important role. This is one of the reasons that we wanted to take up this topic. You will have all your burning questions answered in the next 60 minutes. I'm Lini Susan John, Head of Marketing at Zuci Systems, and I take immense pleasure in welcoming our speakers for the day. Sabapathy Narayanan is a fintech enthusiast, a passionate marketer, and a storyteller. Squirrels, rabbits, and elephants fascinates them the most, and he very interestingly connects them to any communication, be it to an individual or a brand. He currently holds the position of marketing head at PayHuddle, where he's involved in marketing communications, content development, and defining go-to-market strategies. PayHuddle is a payment solutions organization that offers pre-certification consulting, simulators, live test analyzers, and test tool development for the entire payment ecosystem. The company has a very strong presence in the Asian and the North American markets and work on the latest technologies like SRC, QR payments, and open APIs. Next, I would welcome Vasudevan Swaminathan to the live discussion today. Vasu has, as he's famously addressed as, is the president and principal consultant at Zuci Systems, where he plays a pivotal role in developing innovative solutions in the financial services space. Vasu has spent 2 decades in the field of test automation and has been a speaker and leading authority on various QA forums across the globe. Zuci Systems is an intelligent automation solutions company helping businesses produce high-quality software with the help of artificial intelligence and deep learning models. One of the focus areas of Zuci is financial services, and it has been successful in developing machine learning-based innovative solutions for lending firms, helping them ease the credit decisions. So with that intro, let me let you all know that this will be a live session. Audience lines will be muted here, but you are open to log any of your questions at any point of time during this discussion into the chat box. And our speakers will pick them up and get them answered. We'll also have few poll questions coming up during the course of the discussion, and I would request all of you to take part in them. So before handing it over to our speakers, I will have our first poll question come on to the screen. So audience, you have the first question on the screen. What are your thoughts on the impact of COVID-19 on financial institutions? Select one of the options. You will have few seconds to opt them and submit the results. So here are the results, and with this, I will hand over the session to our speakers. Vasu, over to you.
Thank you, Lini. Thank you.
So
Thank you,
Vasu
Lini.
and Sabha, you can switch on your webcams and take up the session from there.
Sure. Sabha's webcam is not active yet. Maybe that's because of the poll getting displayed. You might want to.
Okay, I will do that.
Yeah, sure. Hey Sabha, so happy to have you here today on this discussion. Thank you so much for joining. And thanks, Lini, for sharing that first poll question. Definitely sets the context for us to ask Sabha about the current pandemic. So it was very interesting to see that 67% of the people have expressed, a poll answer saying that the financial institutions are severely impacted as a result of COVID-19. But I wanted to ask, this to Sabha. I will start off with this first question to Sabha. So Sabah, while we all agree that COVID-19 is a health crisis, I just wanted to ask you if it is just a health crisis or is there more to it? What are your thoughts on that?
Yeah, thank you so much for having me here, Vasu and Zuci Systems. Yeah, I was in a session about 2 days ago. They asked a poll question there as to what fatigued people the most during this lockdown. And some of the interesting answers that came up were Zoom fatigue, webinar fatigue, COVID-19 data fatigue, and home fatigue. I just assume that this webinar is not going to add on to the fatigue. Okay. So having said that, let's move to the question that Vasu has asked. So what did we all buy during this lockdown? We bought into additional internet bandwidth, we bought into home entertainment, we bought into home education, we bought additional home fitness, in addition to the essential things like food, grocery, and health items. Right. So if you look at it, economy is typically driven by the non-essential consumption. So that's how it is always. It's not just about the essential consumption. So having liquidity and cash flow on the supply side alone is not going to revive this economy. So that's a point that we have to be very, very cautious about when we are restarting our business. Fortunately, we are all in a very, very privileged situation that we are able to work from home in our current situation, and then we are able to participate in these kind of webinars and all that. But that's not the case with most other industries. For instance, small businesses are the ones that are impacted the most during this lockdown. Guesstimates have close to about 10 crore people have lost their jobs in the mining, construction, manufacturing, and the service segment, and they are not going to get it back easily. Okay, so when you look at it, this is just not a health crisis. While it is a health crisis, it is just not a health crisis. It is a financial crisis, and to a large extent, it is a social crisis. And the bigger problem here is people are going to find it really, really difficult to come out and work because of the virus. And that's going to add a lot of complications to it. So I would broadly say that COVID-19 is a bigger economic and social crisis than just a health crisis.
Thanks for that, Sabah. That makes sense. So naturally, I just wanted to understand a little bit more on this. So COVID-19 is more than a health crisis, and we all realize that. So as spending is on the decrease and governments are, kind of gushing cash into the economy and trying to capitalize businesses and the self-employed through financial aid and everything, how is it going to kind of pan out for, sectors like digital payments? Can they benefit from this, or, how is it going to work for companies like that, specifically in fintech and digital payments and all that?
See, as I said, fund injection on the supply side is not going to revive the economy. Having said that, digital payments will stand to gain because of this COVID situation, because of restrictions in terms of social distancing and contactless payments and all that. So that's going to really help. It all started post demonetization. We were talking about a cashless society, and today we are talking about a cardless society. Okay, and it's powered by all your QR payments, your UPI payments, and all of that. Okay, the poster boys of digital payments in India are UPI, IMPS, AEPS, BBPS, and the FASTag. When you look at digital transactions today, okay, so it has taken a free fall in the month of April compared to March, both in terms of volume of transactions as well as the value of transactions. If you look at it, there is a dip of about 21% in terms of volume of transactions and 27% decrease in terms of value of transactions. And if you look at the March data itself, it's substantially lower than the highs of February. So pre-COVID, the kind of digital transactions that we had, and during the lockdown, the kind of transactions that we are having is completely different. If you want to gauge, okay, the strength of the Indian economy, the best place for you to look at is the amount of GST collections. Okay, in the month of April, if you look at it, we collected about 28,000 crores, which is a 72% dip on the expected GST collection, or that is what we did in the month of March. Okay, so that means you have 72% lower business. So expecting digital transaction levels to be the same as it was in the month of January or February is not going to be very, very realistic. However, digital payments will stand to gain because of this COVID crisis, because of things related to health risks and social distancing and all of that.
Okay, okay. Interesting. So that also means that there's going to be a lot of lending that's going to happen. People are already strapped for cash, and there's going to be a lot of requests for lending that's going to come up. So, given the circumstances, financial services and banks and other institutions, they are already kind of shying away from lending. We see this as a global, scenario or a global pattern, whether it's the UK or the US or anywhere. Lending has become kind of tightened, and getting loans is not going to be easy. Even in India, that seems to be the reaction right now. So, what are some thoughts on that, Sabha?
See, it is very natural for financial institutions not to lend because it's a crisis. Okay.
Right.
So your credit scores and your credit bureau reports, all of them actually mean nothing at all during this crisis. Okay. For instance, I may have a CIBIL score of 800 plus, but there is a possibility I might lose my job tomorrow. Okay.
Yeah.
So that's a lot of risk for a lending institution to take. So typically, financial institutions shut shops when it comes to lending at these points and times. So what they typically do is they carry on their business with the essentials. Okay, so according to them, the essentials are deposit of cash, withdrawal of money, check clearance, government transactions, and all that. So beyond that, they don't really do much. So even if you look at the unsecured loans, which means the credit cards and the personal loans. See, I used to get at least one message every day or one mail every day from every bank stating that you have a pre-approved credit card or you have a pre-approved personal loan.
Right.
Okay, but in the last 60 days, if you look at it, I haven't received even a single mail. Okay,
Yeah.
that's probably an advantage because of this pandemic, because I am not getting spammed by any of these banks or credit card companies. Okay, but so it's completely negligible. So it is safer for financial institutions not to lend without understanding the risks than to lend, okay, so without understanding the risks. So that's the point. And plus, with the stimulus announced and the government guarantees and all of that, financial institutions will start to open up their lending segments soon. So that's what I feel would be the way forward.
Okay. I think we have a poll question coming up for the audience actually. So, Janahalini, if you want to go ahead and post the question, please go ahead. I'll read it out for the audience, and we'll give them some time for them to answer. I'm still waiting for the poll question to pop up, Lini and team.
The question is on the screen. Maybe I would read them out.
Okay, go
Could
ahead.
social distancing lead to more cashless transactions? So, okay, I'm closing the polls. The results
Okay.
are 89% says yes, and 11% of the respondents say no.
Okay. I didn't get a chance to look at the question, so thanks for that actually. So 89% of the people say that there'll be more cashless transactions. Okay, interesting. Okay. I'll continue from there and ask Sabha a few more things around this actually. So continuing from there, Sabha, while it makes economic sense that many businesses will contract and decline in the context of the emerging financial crisis, we see that the environment is pushing consumers to go online actually. So can we say that digital financial services will thrive and fintechs will be seen as the natural remedy from here?
Vastu, can you repeat the question again?
Oh, I'm sorry. I was saying we see that there is a contract and decline in the context of the current pandemic, and we see that a lot of consumers are going online actually. I was just asking if it means fintechs and companies that are in digital lending or digital financial services will thrive and go to the next level from here as opposed to traditional financial institutions.
Well, so yeah, so if you look at it, I mean, who needs credit the most in a crisis like this? So it's typically the MSMEs.
Right.
When you look at traditional financial institutions like banks and NBFCs, they focus on the super prime and prime who have credit scores. So it's a huge opportunity for the online lending platforms or the fintech companies to tap into at this point in time. See, luckily, if you look at the fintech ecosystem, it has evolved really well in India. And this has coincided with the explosion of smartphone usage, internet connectivity, and the consumerism, where we worry about consumption and instant gratification as opposed to the debts that we incur. Okay, so that's what has made things easier for the fintechs to even approach their target segments. So with the kind of money that you have, you can buy coffee, you can buy breakfast, you can buy lunch, you can buy your attire, you can have your lifestyle. But when it comes to buying a home, buying an automobile, or funding your children's higher education, or handling the wedding expenses, how do you do it without? So you need credit for all of these things. So that's where all of these online digital lending platforms will come into play, because they have a ton of alternate methods and alternate data about the borrowers. So this allows the lenders to underwrite better. Okay, so they depend on multiple things in terms of the usage of your mobile phones, the kind of lifestyle that you have, over and above the credit scores that which a traditional FI would look at.
Right.
So that so each of these lenders will have to come up with their own underwriting engines, proprietary ones, that will allow them to be a part of this retail growth. So when I say retail loans, so what is the kind of size that which we are talking about? Today, our retail loan segment is about $45 trillion, of which digital lending accounts for about 6%, around $2.7 trillion. When I say retail loans, I'm talking about home loans, I'm talking about loan against property, I'm talking about unsecured loans in the form of credit cards and personal loans, I'm talking about MSME loans, I'm talking about automobile loans. So this is expected to double by 2024, by which time the digital lending is expected to increase its market share from 6% to 16% of this digital lending, which is going to be $15 trillion. So in essence, what it provides as an opportunity for online lending platforms and fintechs is you can make use of big data, you can make use of open APIs, you can make use of artificial intelligence and machine learning to structure your products in a very, very hyper-personalized way, so that it helps your target markets directly. For instance, there is a company called Cashless, okay? So that focuses on millennials, and their average loan size is only 35 to 45,000 rupees. Okay, so that's a low value loan, and they are targeting millennials who don't have a credit history. Okay. And there are other tech giants who are also coming into play. For instance, Amazon has set up an online sellers network where they connect their sellers along with the borrowers. And Xiaomi has come up with its own product called MI Credit that allows people access to 100,000 rupees of credit easily. So these are kind of things that which are developing, and there are close to about 340 online lending platforms in India catering to the needs of the ones without the credit scores and the credit history and all of that. So in a sense, the digital lending platforms have a lot to contribute in this market segment, and cash at the end of the day is an asset for any financial institution or a lending platform, and they should make use of this towards getting creative in delivering their objectives of lending.
Okay. In fact, I had a question reserved on MSMEs later, actually, but since you mentioned them, I will bring this up. I had a chance to look at a report from PricewaterhouseCoopers that was published in November 2019. In fact, it was a joint report by PwC and the Federation of Indian Chamber of Commerce, actually. So it basically says that out of 6.3 crores of MSMEs in India, only 10% of MSMEs have access to formal credit, while digital lending has grown from 9 billion in 2012 to 110 billion in 2019, actually. And it's likely to shoot up to 350 billion, if I'm not wrong, by 2023. So you partially answered this, but I'm making it even more a little, I'm narrowing down the question here. So should MSMEs tap into digital lending for credit access? And how is that they can get there, given that today only 10% of that population has access to credit?
See, the problems are multifold when it comes to MSME. Okay, so because they don't have access to formal credit, as you rightly said. Okay, the reasons for that is they don't have worthwhile collaterals to offer. Okay, so they have underreported or incomplete financials, and they don't have a lot of documentation that which a lending institution would look at. Okay. So ideally, the combination of online lending platforms and MSMEs would be a great mix. Okay, because while MSMEs have a lot of resources in their hand in terms of doing their business, they don't have credit. So that's the problem. See, for instance, when you look at it, MSMEs are the ones that actually drive our economy. Okay, so we are the 6th largest economy in the world, and MSMEs contribute about 38% of the GDP, and they account for 1/5 of the employment that is generated in any sector. Okay? That's the largest sector if you leave out agriculture and all that. So the biggest impediment for them is not having the right kind of papers. So that's making them fall away. Okay, so it's less what the traditional financial institutions look at is borrowing and lending. I mean, lending money to an MSME is a very time-consuming process for them. Number one, and then it also is a very painstaking effort for them, and it doesn't justify the costs of onboarding them, managing them, or recovering the loan from them to a large extent. Right. So ideal scenario would be for the financial service. I mean, see, the online lending platforms do not have the kind of money that MSMEs require. Okay, so it is better that the financial services companies partner with fintechs towards fueling their growth, and then addressing the needs of the MSMEs through the fintechs. See, for instance, in India, as you said, only 10% of this 65 million MSMEs have access to credit. Of the 65 million, there are about 10 million people who have registered with GST Council. Okay, so which means they pay GST. Okay, even within this 10 million, 8 million of them do not have access to credit. So the government of India has come up with an initiative to provide credit to these 8 million MSMEs who don't have access to formal credit. Okay, right. Based on the GST invoices, based on their cash flow needs. So it would be done through an online digital platform. Okay, so which is an open API that anybody can develop, and then they can link it with the GSTN portal, and then they can back work with lenders like large banks, and then start servicing those loans for the MSMEs. So that's how the entire thing is panning out. So the online lending platforms are going to be the way forward in terms of lending it to MSMEs.
Okay. So interesting you said that. So we said some time back that while global institutions are shying away from lending, there is what we just discussed is a way where digital lending platforms particularly can use emerging technologies like artificial intelligence or machine learning in order to identify the right kind of candidates for loan actually. So how do you think that emerging technologies like artificial intelligence or machine learning can help some of these digital lending platforms identify more qualified candidates for loan disbursement?
See, for instance, see, the alternate data is what they should be looking at. Okay, so I'll give you an example. Okay, so there is this company called Tala, which is run by an Indian, okay, in Kenya. So what they do is they primarily focus on unbanked population, okay, as well as people who do not have credit scores. So if you look at it, 1/4 of the world's population do not have credit scores. And if you look at it in India, despite initiatives like Jan Dhan bank accounts and all that, we still have 190 million people who do not have bank accounts. Okay, so what this company Tala does is they ask, I mean, most of them have mobile phones though. Okay, so they ask these people to install their Tala app on their mobile phones, and Tala app tracks a lot of information about the particular person. See, for instance, let us say I talk to 4 people on a regular basis. These 4 people are like very close to me. Okay, so I talk to them on a daily basis. So that's a plus 50. Okay, in their credit score. Okay, so that you are constantly in touch with a group of people. Okay, and then they look at your travel patterns. Okay, so you travel to your shop, then your home, and then to your market, shop, home, market, shop, home, market. So these are the 3 places that you frequently visit. So there is a pattern in that. So that's another 50 points to your credit score. Okay, and then they also look at the number of people that you come in contact with and the kind of support network that which you have. Okay, so the number of messages that which you receive, the number of replies that you do on those messages and all that. So that becomes additional 50 points. So these are kind of things that which they take up to understand the reliability of the borrower. Okay, so while they don't have credit scores, but they always have information about the reliability of the borrower and then the trust factors from these kind of information. See, typically, how do you build a credit score? Okay, so once you're out of college, you go and work in an organization. Okay, you don't have a credit score. Okay? So then you buy a credit card. Okay, so that's the first thing that comes into your wallet. Okay, so then based on your credit card usage, your credit score increases, and then you slowly move from credit card to a personal loan, from there to a housing loan, from there to an automobile loan, and that's how your credit score gets built. But for those people who do not have a credit score, so the credit score is built based on the usage of mobile and their lifestyle. Okay, so there are a lot of such startups, even in India, that does that. Okay, so startups like India Lens, they do have their own algorithms, and then they do process data differently, and then they have their own underwriting for processing these loans, and they in turn work with 50 plus banks towards provisioning these loans. So
Okay.
that's how market is.
Okay, it's very interesting you say that, because though alternate data as a source for underwriting is becoming popular, even in a country like US, the primary data is what they are still relying on. Though they've started using alternate data, but there is a big argument that alternate data doesn't actually add a lot of value at this juncture, for cash advance companies or lending institutions in the US. But you think that's a very important source of data in India?
See, not just in India, I think world over it would be an important piece of data. See, basically you start with smaller loans that allows you to build your credit history even in these forms. Okay. So you don't have to go for a very high value loan. Okay, so it can even be a lakh or a 50,000 rupee loan. Okay, so that can help a street side micro enterprise. Okay, a food stall. Okay, so somebody who runs a food stall may not require credit more than like 30,000 or 40,000. So today, what does he do? He goes to a loan shark, and the kind of interest that he pays does not make his business viable at all. Okay, so you can start with such loans, and then that slowly builds your credit history, and then you actually become eligible for the formal credit itself over a period of time.
Okay. Thanks, Sabha. I think we have a poll question coming up for the audience around the lending platforms, actually. So, Lini and team, please go ahead and share the poll question and read out for the audience.
So we have the poll question here. Are you interested to know about the use of emerging technologies such as artificial intelligence for credit underwriting? Please choose your option and click the submit button. So we have 100% yes for that.
Okay.
Yeah.
Okay.
So,
nice.
Yeah.
Okay.
You can go.
Okay.
Thank
Sure.
you.
Thank you. So, Sabha, one question.
Like...
Sorry, Sabha, go ahead.
That looks fixed, I said so.
Yeah. So one question that I wanted to expand on, or one last question around this. See, peer-to-peer lending platforms somehow seems to have adjusted during this crisis, actually. So I just wanted to, I mean, that's at least what I have seen, or based on what I have read, actually. So amidst all this COVID-19 pandemic crisis and all that, peer-to-peer platforms seem to have adjusted a little differently, and they've actually, adjusted well, I should say. So do you think all peer-to-peer lending platforms would fare equally in this challenging times, or again there is a excess supply of platforms and it could be a bit of a challenge? What are your thoughts on that?
So I won't say it's an excess supply of platform, because the demand would be much more than the supply that which we have.
Okay.
So I mean, I'm not talking about during this lockdown. I'm very certain post lockdown there would be a huge demand, okay, for credit as a product, because unfortunately we're a bit too late in having announced the stimulus, because a number of organizations have closed down by now. Okay, so it's very difficult to actually help them and revive them and all that. But having said that, whoever is left behind, okay, so they would, and even the individuals. So basically, see, in order for you to revive the economy, you need to provide stimulus on the demand side. Okay, so that's the equivalent to providing free cash. Okay, so that's where the problem is. But we do need to have availability of cash flow on the demand side for the economy to revive. Okay, otherwise, for whatever that you make, most things that are made by companies are non-essentials. You don't really need to live or survive. Okay, so if people aren't going to consume, there's absolutely no point in manufacturing it. Okay, there's absolutely no point in producing it, or for that matter, marketing it. Okay, so you have to be very, very cautious about the nature of business that you are in and all of that.
Okay. So how can financial institutions increase their base today? I mean, in the US, if you look at it, you have credit unions, and then mortgage, then cash advance companies, peer-to-peer lending companies, or consumer loan companies, and everything. And each one of them would want to increase their customer base. I mean, India may not be so diversified, but there are definitely a chunk of institutions sitting here also. So you did mention that post the lockdown there will be definitely excess demand for funds and things like that. But in general, how do you think can financial institutions continue to increase their base, especially given that the economy, they say, is going to take at least 6 to 12 months to recover?
See, the thing is, yeah, as we said earlier, also that credit is an asset for a financial institution. So they have to be in the business of lending. Okay, so only then it makes sense for them to be in existence. Okay, so as Simon Sinek famously says, don't protect your business. Okay, that should be the advice for all financial institutions. Okay, because it's a Netflix moment for them. Okay, when you look at the largest entertainment company today, Netflix is one of the largest entertainment companies. So it's not the production houses that were creating great content that became the largest entertainment company, because nobody thought of creating a platform like Netflix. Okay, you look at Kindle. Okay, so none of the publishing houses wanted to create something like a Kindle. It was Amazon that came up with Kindle, and the publishing houses are catering to it now. Okay,
right.
And same is the case with iTunes. Okay, no music company came up with iTunes. It's a computer company that came up with an iTunes platform. Okay, so it is actually technology that is driving a lot of industries. Okay, so even if you look at India, you look at the telecom market of 2010 or 11. Okay, so I used to pay a bill of 3,000 rupees every month. Okay, and today I consume more. I use their services more than what I was using in 2010. But today I pay 499 rupees. Okay, so what has happened between 3,000 rupees and 499 rupees over a period of 10 years? So there's a lot of competition, and you had to literally bring down your rates. Okay, so what could these telecom companies have done differently in 2010? Okay, they had captive customers. They had more than 400 million captive customers. They could have become leaders in OTT content. They could have become leaders in educational technology content, because they had these captive customers who would have anyway consumed anything that was offered by any of these companies. But they missed the point there. They missed the bus there. Instead, they focused on ARPUs, average revenue per user, based on what they were offering. And they were trying to maximize it by tweaking the bills here and there. Okay, and then modifying it for every minute, 60-second pulse and 6-second pulse, and all of these things is what they were playing around with, and towards increasing the ARPU instead of focusing on how to innovate and to stay in a perpetual state of beta. So that's what happened with them. So now that we are talking about financial institutions, you look at even consumer loans in India. Okay, so when I buy a furniture set on a consumer loan, okay, so what if I don't repay? Okay, the consumer loan company is not going to get any value out of taking the furniture back to their place, because it's of zero value once it reaches my home. Okay, but typically the repayment rates are very, very high when it comes to consumer loans, because people are honest. If they have borrowed, they want to pay it back. Okay, so that's how consumer loans are. But the traditional banks have lost out on the consumer loans battle. So they have had a 75% decrease year on year in terms of consumer loans compared to NBFCs. So NBFCs have started to thrive. Okay, because of zero financing options and cashbacks and all that these NBFCs came up with, which the traditional banks weren't able to meet. Right. So that's the reason why there is a huge shrinking of percentage value of the consumer loans. So that's a bigger problem. Okay, so which is the largest consumer finance company in India? Okay, so it's one of the largest is Bajaj Finser. Okay, and when you look at their strategy drivers, okay, they talk about focusing on existing customers. Why do they have to have that focus on existing customers? As we all know as business people, okay, so it's easier to get business out of an existing customer than to get a new customer. Okay, so what is the value chain that Bajaj Finser offers? So they offer me a consumer loan, then they give me a cash card, then they give me a personal loan. So the lifetime value of a customer for Bajaj Finance increases, and the lifetime validity of the customer also increases. So once I go and sign up with Bajaj Finser today, okay, I might probably be their customer for the next 15-20 years. Okay, right. So that's the kind of a value that they see in having focus. I mean, having this as a strategic driver. The second thing is they are on a perpetual state of beta. Okay, for instance, they keep innovating at all times. Initially, they spoke about loans that are approved in 3 minutes, and today they are talking about loans that are approved in 3 seconds.
Right.
Okay. And then they also invest deep in technology. Okay, so the sole purpose is being, transact without any constraints of time or place or proximity. Okay, so in fact, there are a bunch of questions that and they keep talking about with their customers. Will I be able to apply online? Yes. Okay, will I be able to get a statement of my account on a monthly basis? Yes. Will it have all the details of my account? Yes. Will I be able to foreclose? Yes. Will there be any charges on foreclosure? Absolutely no. Okay, will I be able to borrow back some of the money that I have already repaid? They would say yes. Okay, and then can I do all of this without human intervention? They would again say yes. So that's the kind of usage of technology has done to them. Okay, so they understand that the way in which you use technology is more important than just using technology. So they creatively use it so that they deliver on their objectives. In addition, they also focus on world-class partnerships. For instance, they use Salesforce for their online capabilities, Microsoft for their software, TCS for their process mapping, and Crystal for their audits. Okay, so they have a complete zero tolerance policy on compromise. Okay, so this is precisely what financial institutions should do today. Number one, to either adopt technology or at least piggyback on fintechs to drive value out of this relationship. So in essence, I would go back to the statement by Simon Sinek: don't protect your business. Okay, so today you are the only ones with the kind of cash flow that is needed by the business environment, and fintechs have to be dependent on you, at least as a have to partner with you. But it's the time is not too far away before somebody like a Bajaj Finser comes into the play.
Excellent.
In all kinds of
Thank you, Sabha. Thank you so much for that. So let me go back and pick the cashless thing that we were discussing earlier. Actually, so ours is a major cash-driven economy, right? So those small businesses have kind of started accepting cashless mode of transactions. The trend is not as huge as what we see in other economies. So would the pandemic bring in a significant change in India to move towards cashless transactions?
See, we have been talking cashless for the last 5 years or so now. Okay. So and then now we have moved into cardless. So there is definitely there is a shift towards digital modes of payment, but cash is staying. That's what I would say, because the cash in circulation, if you look at it as a percentage of the GDP, okay, it's about 12% today, which is not low. Okay, but there is a perceptive shift towards digital transactions, and something like a COVID, which none of us are able to explain today, which is something so unprecedented that nobody in this generation would have encountered anything similar to this.
Yeah.
And we are scared about so many things. So that has definitely made a shift towards it. And there is also a statistic that says 42% of Indians have increased their usage of digital payments. Okay. While the value may not justify the usage, but I think it is becoming a habit. Okay. And over a period of time, a lot of people would start to adopt digital more for convenience than for anything else.
Okay, and just to expand a little more, has the pandemic brought in any indirect benefits to this economy? I know that you answered it, but just wanted you to elaborate a little more if you have some thoughts.
See, I am not sure as to any benefits to the economy, whether this COVID has contributed. Okay. So it has impacted drastically. Okay, so if at all anything has happened, people wouldn't be as focused on instant gratification going forward as they were earlier. Okay, so there will be a lot less discretionary spends. It is actually counterproductive to the economy, because if demand side people don't spend money, okay, so it's not going to really help the economy. So I'm not sure if it has actually brought in any benefits to the economy. I would say it really hasn't. Okay, but there are a lot of new offerings, new products that can come from various industry segments. For instance, EdTech would be a completely different vertical going forward. Okay, home entertainment would be a completely different vertical going forward. Okay, so there's a lot of opportunities which have come up for people who provide essentials for work from home. Okay, so I never really thought about the quality of the headsets that I was using and the kind of chairs that I was using at home earlier. So now people have started looking at all of those things, and then the quality of internet connectivity. And in fact, even for this webinar, I was thinking about having a backup internet connectivity. Okay, so what if my main line comes off, because it's a home broadband connection, right? So you start worrying about all of those things. So these are, I mean, in fact, this has provided a big impetus for the telecommunication industry, okay, which wasn't doing really well. okay, but post this lockdown, okay, so there's a lot of requests and needs for internet bandwidth as well as for
Right.
voice communication and all that, so that which can be reliably provided by people. So those are some advantages that have come out of this pandemic, but in terms of benefits to the economy, I really doubt.
Okay. Okay. I think there are a couple of questions from the audience also here. Let me just see this. Okay. There is a generic question, Sabha, in order to compare the economies within Asia actually, and your take on that actually, comparing Indian economy with in general the Asian economies such as China or Korea, which are also affected by the pandemic. So, if you have any thoughts, please.
Yeah, I mean, the world over, the economies are affected by the pandemic. Okay, so not just China, Korea, and India. Okay, so if you look at it, we are better placed because of the digital ecosystem that which we have developed in the last few years. Okay, so I think throughout the world, if you look at it, it's only India and China that have got the kind of infrastructure that we are talking about today. Okay, so the kind of, I mean, UPI as a payment method, okay, so has fueled the growth of things like Google Pay, Phone Pay, and all of that. Okay, it's so easy. Okay, so that's something that Google has even licensed to take it to the US. Okay, so that's how easy things have become when it comes to peer-to-peer payments and all that. So except perhaps China and India, I don't think any other country in the world, leave aside just Asia, any other country in the world have got the kind of infrastructure at this point to do the kind of things that they're able to do. Okay, and plus every country, I mean, you look at all the large economies of the world, it is the MSMEs that drive them. Okay, and we are definitely better placed to serve the needs of MSMEs with all the online lending platforms that which we have in India. Okay, so I think post lockdown we have to take cautious efforts and conscious efforts towards figuring out ways and means by which we can extend credit to ones without credit scores, but who have the borrowing.
Okay, okay. There's one more question which I'll just read out, try and summarize this actually. I think this is more of a digital transformation thing. So, yeah, so the question is basically how would digital transformation impact all of the financial institutions moving forward the lockdown or moving forward from COVID actually. So would technologies that are used in digital transformation such as mobility, conversational chatbots and things like that make a huge difference? I mean, a generic question again. Yeah, if you have any thoughts.
No, I do think, I mean, these are inputs for the alternate data that which we are talking about. Okay, so but there is a flip side to it. Okay, so we don't have a data protection law that is as yet functional in this country. Okay, so it also raises a bit of privacy concerns. So we have to be careful about how this entire thing can be accessed and what are the kind of rules and regulations and the compliance that which we need to have towards addressing it.
Okay, okay. Okay, I just have one question for you. So how long is the recovery phase going to be from the current slowdown, and what kind of financial institutions would survive this?
Yeah, I would say, I mean, in my mind, the best case scenario is anywhere between 4 to 6 quarters. Okay, so that's the kind of time frame that it is going to take for the recovery. I think all the financial institutions would survive. Okay, so I don't think they would have too much of an issue. But only thing is they have to figure out creatively how to handle a lot of problems that they will face. For instance, NPAs are going to balloon. Because RBI announced a moratorium. Okay, so typically banks move anything that is not being paid for 31 to 60 days into a category called SMA1. Okay, and then they move anything between 61 and 90 days into a category called SMA2, and then it moves into NPA. Okay, so with this 3 months of moratorium, whoever has availed it, so the likelihood of them having better finances to come and pay from the 4th month is minimal. Okay. So the NPAs are going to balloon. Okay, so that is going to be a big problem. And plus, this financial crisis is not something that has been brought upon by COVID alone. Okay, so this has been brewing for some time. Okay, so we had the meltdown of ILFS pre-COVID. Okay, so we had issues with PMC, we had issues with Diwan housing, we had issues with S Bank crisis. So all of these things have contributed to the crisis that which we are facing. Okay. So because of the pandemic, okay, so these have been zero earning months for all of these financial institutions. So now they have to really figure out how to creatively, do I use technology or piggyback on fintechs to fuel my growth? Okay, so because one is credit, the processing of credit, the other one is recovery of credit. Okay. These two are very important for them. Okay, and they don't, their cost structures do not allow them to give low value loans. So for low value loans, they have to be dependent on some other online platforms. And I think India will move towards online lending platforms by and large. Okay, for all the low value needs, okay. Except perhaps project financing that runs into multiple crores. Everything else would move towards online lending platforms. Okay, so while the projection is about 16% of retail loans by 2024, I believe that it could go anywhere closer towards 40-50% of retail loans through online lending platforms.
Okay. We have one last question for the audience. Let's see if the answers match what Sabha told about the recovery term. So go ahead, Lini, and throw the question on to the audience. Actually, the poll question to the audience.
Yeah. So the question is, how long do you believe the global economy will take to recover from this phase? So we have 100% of 12 to 18 months.
Oh, that's perfectly in line with what Sabha said. Okay, nice. 4 to 6 quarters. Okay. Thank you, Lini. You can go offline. Thank you. Okay. So I think that's more or less what I had from my side. Lini, are there any questions that I'm missing from the audience, or except for those 2-3 questions, we didn't have any other ones?
Yes, we have a question. Yeah, so there's a question like how the private digital lending institution is associated with the state or government financial bodies like RBI, how this new financial ecosystem is interlinked, traditional banks, digital lenders who govern these systems.
See, all of them work through acquiring, all of them work through traditional banks. Okay, most of these platforms in turn work with multiple banks. So what they do is these fintech platforms, they perform the role of an aggregator. Okay, and then disperse loans to the retail through multiple banks. So that's how the whole thing is governed. They do need to have licenses and all that. They need, and there are some restrictions in terms of licenses as to the kind of paid up capital that you need to have and all of that. Okay, so those are the compliance side of things. That apart, they work with traditional banks. Okay, so towards lending. Okay. So even all of these UPI platforms and all that, everything requires a scheduled bank at the back end. See, if I'm able to transfer money from my account to Vasu's account, I'm able to do that through a UPI platform because I have an account with a scheduled bank and Vasu has an account with a scheduled bank. Okay, so all the heavy lifting is done by the scheduled bank and not by the fintech. Okay, so they only provide the UI part of it. Okay, and the business relationships. Okay, so all the heavy lifting is done by a scheduled bank at the end of
the day.
Okay. We have one more question from the audience. That's about what do you think about adoption on customer experience and user experience with financial institutions post COVID?
Can you repeat that, Lini?
What do you think about the adoption on customer experience or user experience with financial institutions post COVID?
Right. So, see, typically, if you ask anybody, okay, so I would much rather prefer to do my banking transactions with a private bank compared to a scheduled bank or to a nationalized bank. Okay, for a simple reason, most of my questions get answered in a self-service platform with a private bank. Okay, my app is self-sufficient when I use my ICICI account vis-a-vis a nationalized bank account. Okay. So the user experience and the customer experience in terms of providing support to a customer query and all that can be enhanced with the right kind of technology and tools that are deployed at the bank's premises, okay, and that which are made available for the users. So I would certainly think that the move towards the customer experience and user experience is already begun. So it has no direct correlation with pre-COVID or post-COVID, okay. But people are implementing technology. Even the example that I gave about Bajaj, okay. So they are talking about when they say without a human interface, they're not talking about removing the human touch. They're talking about enhancing the customer experience. So whatever that I need gets answered, okay. So whether it gets answered through a chatbot or it gets answered through a messaging platform or gets answered by an agent, it doesn't matter to me as long as my queries get answered. So, and today millennials might want to communicate using social media channels. Okay, so as long as I have all the channels which are available to provide customer service and customer experience, then it becomes easier for me to provide the kind of experience that a millennial or the new age customer expects of you.
Okay, thanks, Sabha. Any other questions, Lini?
No, so we are done with the questions.
Okay. Sabha, I just wanted to again thank you so much for joining us today and for sharing your valuable experience and expertise. Probably we should do another session post the COVID crisis to see if whatever that we projected is happening the right way. So we'll try and target that.
That's a tough ask. Anyway, thank you so much, Vasu. Thank you everyone for attending this webinar. And if there are any questions, you can write to Zuci Systems and I'll try to answer them offline.
Sure. Thank you so much, Sabha. Take care. Thanks, everyone. Thank you. Thanks, Lini and team.